Time now for business. Let's say hello to Kate Moody.
Hi, Francois.
We begin in Turkey, where the president has been crossing swords with his own central bank.
Absolutely. Recep Tayyip Erdogan has been very vocal in calling for low interest rates, which he believes will promote economic growth. This Thursday, though, the central bank exerted its independence, hiking its key interest rate to 24% in an effort to contain spiraling inflation. Anka Ula explains.
Is Turkey's central bank taking back control? On Thursday, it surprised investors by raising the key interest rate 625 base points, from 17.7% to 24%. The central bank said the move was intended to fight rising inflation, which stands at almost 20% in Turkey.
There were many doubts about the central bank's independence. It took a decision and did what it had to do. This will calm the doubts.
The central bank hadn't touched interest rates since early June, and investors were concerned it was buckling under pressure from President Recep Tayyip Erdogan. Erdogan calls himself an enemy of interest rates. He says they lead to inflation, though the opposite has been proven true. Before the latest rate hike was announced, Erdogan acknowledged the central bank was free to make its own decisions, but he made his distaste clear.
Man, when are we going to be wise? You can control the interest rates, but you cannot control inflation. Inflation occurs as a result of your wrong steps. And who pays the price? Our people, above all.
The Turkish lira has been steadily sliding since the start of the year. Battered by a dispute with the U.S., it hit a record low against the dollar in August. After the bank's rate hike, it jumped 5%. But a simple rate hike alone won't be enough to solve all of Turkey's financial troubles. Its economic growth has slowed, and a weak lira means the mountain of debt held in foreign currencies has only gotten bigger.
The European Central Bank has kept its interest rate on hold at record lows while pushing ahead with plans to scale back its support of the Eurozone economy. From next month, the bank will cut its bond buying scheme in half to just 15 billion euros per month, and it will phase out its quantitative easing program altogether by the end of the year. The bank has been pumping money into the economy since March 2015, a program that's widely credited with helping the bloc emerge from its crisis. Head Mario Draghi predicted that inflation would be just under the bank's 2% target at 1.7%, and he slightly lowered predictions for economic expansion.
The risks surrounding the euro area growth outlook can still be assessed as broadly balanced. At the same time, risks relating to rising protectionism, vulnerabilities in emerging markets, and financial market volatility have gained more prominence recently.
Let's check in on the day's trading action now. The major European indices traded just under pressure this Thursday. The Frankfurt DAX, the only one ending above the flat line. The FTSE 100 was slightly down as the Bank of England kept its interest rates on hold, but underscored its concerns about greater uncertainty linked to Brexit negotiations. Wall Street's faring better this hour. The Nasdaq is outperforming as tech stocks rise. After an initial drop on Wednesday, Apple shares are now up about 3%. Just a day after it unveiled a range of bigger, more expensive iPhones. Unions representing RyanAir cabin crew in Belgium, Italy, the Netherlands, Portugal and Spain have announced a strike for September the 28th. It's the latest in a series of walkouts by staff at the carrier over pay and conditions. Solange Mougin has more.
Simultaneously and once a month, RyanAir union representatives from 5 European countries have announced a collective strike for September 28th, and they've called on European authorities to get involved. At issue for RyanAir's employees and pilots are their working conditions and salaries. For those not based in Ireland, they say their contracts are under Irish legislation, and thus keeping them from receiving the protections and benefits of their home countries. Another gripe is salaries, which staff say are generally lower than at other airlines. This despite the fact that RyanAir is looking at over 1.2 billion euros in profits this year. And this is just the latest flare-up of a summer of strikes. On Wednesday, RyanAir had to cancel 150 of its 400 flights to and from Germany after a walkout there. Reacting to the strike, the CEO of RyanAir said they would not roll over.
You've only two choices here as a company. When you're threatened with a strike, you either roll over or you say, fine. One of the more ludicrous demands this year has been they want another 42% pay increase. strike away.
Germany's employees were also part of a coordinated strike with 4 other countries last month. The group effort caused 400 flights to be cancelled and chaos for 55,000 passengers.
A bit of a warning to perhaps take a train, Francois.
It's third day on the road. You're following this story closely.
It affects millions of people.
It does. RyanAir, which everyone has an opinion about, I've noticed. Many thanks for that, Kate Moody. We'll have more business news for you later.